Okay, let's get right into it. Today, we're cutting through all the noise to give you a high-level briefing on the single biggest force that is completely reshaping global deal-making. The truth is, we are living through a massive investment supercycle, and it's all being driven by one single technology. And just to wrap your head around the sheer scale of what's happening, just look at this number. $4.9 trillion. That's the projected value of global M&A for 2025. This isn't just a number, it's a signal. It's the market telling us that the recent caution, yeah, that's over. Confidence is roaring back, and the deals are only getting bigger. This quote from Goldman Sachs, it absolutely nails the new mindset. It's not about small, safe, incremental moves anymore. Not at all. The mandate from boards, from investors, it's crystal clear. You have to make bold, transformative acquisitions to grab a piece of this innovation supercycle. So what's behind all this ambition? Well, analysts are calling it the Great Re-rating. And what that means is that one single powerful force is causing a fundamental reevaluation of, well, pretty much every asset class out there. And that force, of course, is artificial intelligence. The race to acquire AI capabilities has gone from being an option to an absolute necessity for survival. So here's how we're going to break this all down. First, we'll look at the incredible scale of this AI-driven M&A boom. Then, we're going to dive into where all that capital is actually flowing inside the AI stack. We'll ID the power players funding these massive deals. We'll talk about the new rules of the game for deal-making, and then we'll wrap it all up with a look ahead at the investment outlook for 2026 and beyond. All right, let's start with the big picture. The AI M&A supercycle. We are now in a world where AI has become the universal driver of valuation, not just in tech, but across every single industry. And what's really wild here is just how fast this is all happening. Tech M&A deal value just exploded to over $1 trillion in 2025. We're talking a staggering 66% jump year over year. And almost all of that growth, it's concentrated in deals designed to snatch up AI capabilities. This really points to a fundamental shift in strategy. We have to stop thinking of AI as just another tech sector. It's not. It's now a foundational layer for the entire economy, kind of like the internet or the cloud. It is disrupting every industry all at once, which is driving this massive wave of M&A in software, data centers, and yeah, even energy. So where's all this money actually going? That brings us to our next point, investing in the AI stack. You can really think of it as the new picks and shovels gold rush. Just a couple years back, the M&A focus was on the gold itself. The big foundational models, the cool new AI apps. But now, in 2026, the strategy has made a hard pivot. The real money, the smart money, is chasing the picks and shovels, the underlying physical infrastructure that makes all of this AI stuff possible in the first place. So what exactly are these new picks and shovels? Well, some people are even calling them the new oil. We're talking about data centers, specialized semiconductors, and AI chips, power grids, networking hardware, and even things like industrial cooling. These have suddenly become the new strategic bottlenecks, and securing control over them is everything right now. And the scale of this infrastructure build-out is, well, it's almost hard to comprehend. Take a look at this number, $760 million. Now, that's not a total. That was the average daily spending on AI infrastructure by the big US tech companies from early 2024 to late 2025. It is an absolutely unprecedented investment boom. So who on earth is writing these enormous checks? This leads us right into our third section, the capital power players. Let's find out who's really funding this supercycle. In the past, you'd expect the big corporate buyers to dominate a chart like this, but the whole landscape has changed. Private capital, and especially private equity, has moved right to the center of the M&A world, right alongside a new and very aggressive class of sovereign wealth funds.
And here's the really crucial point. Private equity now makes up roughly 40% of all M&A activity. These firms have totally evolved. They're not just financial players anymore. They are core strategic drivers, putting together huge consortiums to bankroll massive deals in AI infrastructure.
And we're also seeing the rise of this new type of buyer, the sovereign-backed strategic. Just look at Saudi Arabia's Public Investment Fund, the PIF. They are aggressively building a global gaming empire, helping lead a $55 billion consortium to take EA private and snapping up key mobile IP. They're acting like strategic acquirers, not just passive investors.
Now, all this intense competition is also changing how the deals actually get done. And that brings us to the new rules for deal making. It's all about finding creative structures in a market that's getting more complex by the day.
One of the key terms you have to understand now is the acqui-hire. The war for AI talent is just so fierce that big companies are literally buying entire startups, often for a huge premium, not for their product, not for their revenue, but simply to get their hands on a small team of elite engineers and founders. We're also seeing these fascinating new strategies like circular financing. So here's how it works. A major chip or cloud provider invests billions in an AI startup. Then that startup turns right around and uses the cash to buy the investor's computing services. It creates this perfect self-reinforcing ecosystem, right? It locks in demand for the investor, and it just supercharges development for the startup. But it's not just about creative financing. The regulatory environment is getting so much tougher. And as this quote really highlights, success now depends on some pretty sophisticated strategy. You've got to craft the perfect deal narrative and then navigate this incredibly complex web of global antitrust and national security reviews. Okay, let's pull all of this together. Our final section, the 2026 and beyond investment outlook. Where is this market actually headed from here? Well, analysis from firms like Acquery points to 5 key themes shaping the future. First, no surprise, AI is still the universal driver. Second, scale becomes the ultimate defense, especially in media and infrastructure. Third, those big corporate acquirers, they are back to making bold strategic moves. Fourth, clearer regulations are opening up new M&A plays, particularly in digital assets. And finally, we're seeing more down-round exits as smart buyers find a lot of value in late-stage startups that have been repriced by the market. And all of this really leads to the most important takeaway from our briefing today. The era of pure financial engineering, it's giving way to something new. In this new world, success isn't about just clever deal structures anymore. It's about having genuine strategic logic and the real ability to use AI to drive measurable operational value. So that really leaves us with one final, provocative question to think about. The AI arms race is on. There's no doubt about it. The strategic imperative is clear, so the only decision left for you is where to place your bets. Are you going to invest in the weapons, the AI models and applications, or are you going to invest in the arms dealers, the ones who supply the critical infrastructure that powers them all?